Hello friends and welcome to video lesson on bank promotion study. This lesson is about know your customer guidelines, that is KYC guidelines, which are released by RBI. These guidelines are issued by RBI under the section 35A of the Banking Regulation Act 1949. So under the section 35A of the Banking Regulation Act 1949, these guidelines are issued to the banks and other regulated entities like NBFCs. The objective of KYC guidelines is to ensure anti-money laundering (AML) and combating of financing of terrorism and prevent banks from being used for money laundering activities by criminal events. It also enables bank to understand its customer and their financial dealings to serve them better and manage its risk prudently. So AML stands for anti-money laundering and CFT stands for combating of financing of terrorism. Financial Action Task Force guidelines on prevention of money laundering also need to be followed. So Financial Action Task Force FATF. For the purpose of KYC policy, a customer is defined as a person of or entity that maintains an account and or has a business relationship with the bank. A person on whose behalf the transaction is done by another person is also covered under the definition of customer. So if there is a person who is the beneficial owner on whose behalf if a transaction is done, then that person is known as the beneficial owner. So here this should be or, person or entity, not of. This is a typing mistake. Walk-in customers are covered if transactions or connected transactions are of rupees 50,000 or above. So connected transactions means one or more transactions which sums up to 50,000 or above. Beneficial owner, where the customer is a company, the beneficial owner is the natural person who, whether acting alone or together or through one or more judicial persons, have a controlling ownership interest or who exercise control through other means. So for this purpose, let us say the controlling ownership interest means ownership of entitlement of more than 25% of the shares or capital or profits of the company. So if a person is having more than 25% of the shares or capital or profits of the company, then that would be called as the beneficial owner. Control shall include the right to appoint majority of the directors or to control the management or policy decisions, including by virtue of their shareholding or management rights or shareholders agreement or voting agreements. So where the customer is a partnership firm, the beneficial owner would be the person who is having more than 15% of the capital or profits of the partnership. So in case of company it is 25% and in case of partnership it is more than 15% of the capital or profits. So similarly, where the customer is an unincorporated association of body or individuals, the beneficial owner would be the person who is having more than 15% of the property or capital or profits of the unincorporated association of body of individuals. So here the term body of individuals includes the societies also. Where no natural person is identified, the beneficial owner is the relevant natural person who holds the position of senior managing official. Next is where the customer is a trust. So here the beneficial owner is having 15% or more interest in the trust and any other natural person exercising ultimate effective control over the trust through a chain of control or ownership. So in case of company it is 25%, whereas in others it is 15% or more. Components of KYC policy. So there are 4 components of KYC policy. So 4 components. Sometimes this question is asked, how many components of KYC policy are there? So 4 components are there. First one is customer acceptance policy, customer identification procedure, monitoring of transactions, and the last one is the risk management. So we will see each one by one. Before that, PMLA, that Prevention of Money Laundering Act, and the roles shall include the managing director or a whole-time director duly authorized by the board of directors if the regulated entity is a company. It will include the managing director if the regulated entity is a partnership firm, the proprietor if it is a proprietorship concern, the managing trustee if it is a trust, a person or individual as the case may be who controls and manages the affairs of the regulated entity if the regulated entity is an unincorporated association or a body of individuals, and a person who holds the position of senior management or equivalent designated as a designated director in respect of cooperative banks and regional rural banks. So the term managing director and the whole-term director, it will have the same meaning which is assigned to them in the Companies Act 2013. Let us understand some of the definitions which are there pertaining to Know Your Customer guidelines. So digital KYC, it means the capturing live photo of the customer. It should be live, not liver. It should be live photo of the customer and officially valid document or the proof of possession of Aadhaar where offline verification cannot be carried out, along with the latitude and longitude of the location where such live photo is being taken by an authorized officer of the bank. Transaction. Transaction means a purchase, sale, loan, pledge, gift, transfer, delivery, and includes the opening of account, deposit, withdrawal, exchange or transfer of funds in whatever currency, whether in cash or by check, payment order or other instruments or by electronic or other non-physical means, the use of a safety deposit box or any other form of safety deposit, safe deposit, entering into any fiduciary relationship, any payment made or received in whole or in part for any contractual or other legal obligation. So this all will constitute a transaction. Suspicious transaction. So suspicious transaction, it includes an attempted transaction also. Sometimes it happens that the transaction is not complete and it was attempted. Then also it would be considered as a suspicious transaction, whether or not made in cash. It is not necessary that the suspicious transaction be made in cash, which give rise to a reasonable ground of suspicion that it may involve profits of an offense regardless of the value involved, appears to not have economic, rational or bona fide purpose, or give rise to a reasonable ground of suspicion that it may involve financing of the activities relating to terrorism. So this all will be construed as a suspicious transaction. Digital signature, it will have the same meaning in KYC as assigned to it in the clause P of subsection 1 of the section 2 of the IT Act 2000. So we can understand that the definition of digital signature is taken from the Information Technology Act 2000 for the purpose of examination. Equivalent e-document, it means an electronic equivalent of a document issued by the issuing authority of such document with its valid digital signature, including documents issued to the digital locker account of the customer. So if DigiLocker account customer documents are there, they also will be considered as the equivalent e-document. Know Your Client Identifier, KYC identifier, means the unique number or the code assigned to a customer by the Central KYC Records Registry. Non-profit organization means any entity or organization that is registered as a trust or a society under the Societies Registration Act 1860 or any similar state legislation, or a company registered under Section 8 of the Companies Act 2013. Officially valid document means the passport, driving license, proof of possession of Aadhaar number, voter's identity card issued by Election Commission of India, job card issued by NREGA duly signed by an officer of the state government, and letter issued by the National Population Register containing details of name and address. So total these are 6 officially valid documents. There are 6 officially valid documents. So where the officially valid document furnished by the customer does not have an updated address, the following document or equivalent e-document shall be deemed to be officially valid document for the limited purpose of proof of address. So if the person is not having updated address, then the utility bill, which should not be more than 2 months old of any service provider, electricity, telephone bill, postpaid mobile phone, piped gas or water bill, and property or municipal tax receipt, pension or family pension payment order issued to retired employees by government department or public sector undertakings if they contain the address, letter of allotment of accommodation from employer issued by the state government or central government department, statutory or regulatory bodies, public sector undertaking, scheduled commercial banks, financial institutions and listed companies, and leave and license agreements with such employers allotting official accommodation. The customer shall submit officially valid document with current address within a period of 3 months. So it should not be older than 2 months and it would be valid for 3 months. Where the officially valid document presented by a foreign national does not contain the details of address, in such case the document issued by the government department of foreign jurisdictions and letter issued by the foreign embassy or mission in India shall be accepted as a proof of address. FATCA. FATCA stands for Foreign Account Tax Compliance Act of the United States of America, which requires foreign financial institutions to report about financial accounts held by US taxpayers. Accounts which are held by US taxpayers or foreign entities. Taxpayers hold a substantial ownership interest, or foreign entity in which US taxpayers hold a substantial ownership interest. This should not be S, this should be US. U and S. United States taxpayers which are holding a substantial ownership interest. So that stands for FATCA. Non-face-to-face customer means customers who open accounts without visiting the branch offices of the banks or meeting the officials of the bank. Politically exposed persons are individuals who are or have been entrusted with prominent public functions in a foreign country. Prominent public functions in a foreign country like heads of the state, government, senior politicians, senior government, judicial, military officers, senior executives of state-owned corporations, important political party officials, etc. Cell bank means bank which is incorporated in a country where it has no physical presence and is unaffiliated to any regulated financial group. So cell banks means they are incorporated and they have no physical presence, they are just on papers. So customer acceptance policy. So components of customer acceptance policy. First we will see the first component. So this is the first component of the KYC policy, customer acceptance policy. So first of all, the bank board should clearly lay down policy relating to KYC considering the following. KYC norms should be applicable on all accounts except small accounts and on all persons authorized to operate the account. KYC should be done for walk-in customer also, where the amount involved is equal to or exceeds rupees 50,000, whether it is conducted in a single transaction or several transactions that appears to be connected. So it is not necessary that 50,000 is done in a single transaction. Even if multiple transactions sum up to 50,000 and they appears to be connected, the KYC should be done for walk-in customer. KYC should be done on beneficial owners also. Customers should be categorized into low, medium and high risk. So low risk customers are salaried employees, people belonging to lower economic strata of the society whose accounts show small balances and low turnover, government departments and government owned companies, regulators and statutory bodies, etc. High risk customers include non-resident customers, high net worth individuals, trust, charities, NGOs, organizations receiving donations, companies having close family shareholding or beneficial ownership, firms with sleeping partners, politically exposed persons of foreign origin, non-face-to-face customers, and those with dubious reputation as per public information available. That is, etc. Bullion dealers, including sub-dealers, jewelers. However, only non-profit organizations and non-government organizations promoted by United Nations or its agencies may be classified as low-risk customer. So among the NGOs and non-profit organizations which are promoted by United Nations or its agencies, they can be classified as low-risk customer. So whatever does not fall under the definition of low risk and high risk would be the medium risk or the moderate risk customer. Banks should review the risk profile of the customer at least once in 6 months. So once in 6 months, the profile should be reviewed. Customer identification procedure and due diligence. So for opening a bank account, banks shall undertake customer due diligence. Bank shall obtain. Due diligence means to know about the customer. Contain the following information: a certified copy of an officially valid document containing details of his identity and address, one recent photograph, permanent account number or Form 60, or any such other document pertaining to the nature of business or financial status specified by the regulated entity in the KYC policy. Officially valid document means passport, driving license, proof of possession of Aadhaar, voter's identity card, job card issued by NREGA, and letter issued by population register containing the details of name and address. So these are 6 officially valid documents. Banks shall obtain the Aadhaar number from an individual who is desirous of receiving any benefit or subsidy under any scheme, which are notified under Section 7 of the Aadhaar Targeted Delivery of Financial and Other Subsidies, Benefits and Services Act. Banks at receipt of the Aadhaar number of the customer may carry out authentication of the customer's Aadhaar number by using e-KYC authentication facility provided by UIDAI, that is Unique Identification Authority of India. So these full forms are also very important. Sometimes these are also asked in the examination. UIDAI stands for Unique Identification Authority of India. Upon receipt of the customer's declaration that he is desirous of receiving any benefit or subsidy under any scheme. So whenever Aadhaar can be taken only if the customer is desirous of taking benefit under the scheme. Banks may carry out Aadhaar authentication, offline verification of an individual who voluntarily uses his Aadhaar number for identification purpose. Further, regulated entities other than banks may carry out offline verification of a customer if he is desirous of undergoing Aadhaar online verification for identification purpose. If an individual is not a resident, following documents shall be obtained: PAN or phone number, 16, one recent photograph, a certified copy of officially valid document containing details of identity and address. In case the officially valid document submitted by a foreign national does not contain the details of address, the document issued by the government departments of foreign jurisdiction and letter issued by the foreign embassy or mission in India shall be accepted as the proof of address. In case the officially valid document furnished by the customer does not contain updated address, the following documents shall be deemed to be officially valid document for proof of address temporarily for 3 months. So this we have already seen, like utility bill which is not more than 2 months old by any service provider, property or municipal tax receipt, pension or family pension payment order, then letter of allotment of accommodation from the employer. All these we have already seen, but the thing is that it should not be more than 2 months old and it can be available only for 3 months. Then customers shall submit Aadhaar or OBD updated with the current address within a period of 3 months of submitting above documents. Banks shall not seek introduction while opening accounts. So introduction has been slashed. In case an individual customer who does not have an OBD and desires to open a bank account, banks shall open a small account. The bank shall obtain a self-attested photograph from the customer. KYC verification, once done by a branch office of the bank, shall be valid for transfer of the account to any other branch of the same bank. Periodic updation shall be carried out at least once in 2 years for high risk customer, 8 years for medium risk customer, and for 10 years for low risk customer. So once in 2 years. So it is like 2, 8 and 10. 2, 8 and 10. 2 for high risk, 8 for medium risk, and 10 years for low risk customer. Individual customers, if there is no change in the KYC information, a self-declaration from the customer in this regard shall be obtained through customer email ID. When there is a re-KYC is done. So after 10 years, if there is a requirement and there is no change in the customer KYC information, then customer can simply send a mail through email ID or from customer mobile number, ATM, digital channels, or through letter. In case of a change only in the address detail, a self-declaration of the new address will be obtained from the customer through customer's email ID, customer's mobile number, ATM, digital channels such as online, internet banking, and the declared address shall be verified through positive confirmation within 2 months by means such as address verification letter. So if there is a change in the address, then bank can accept the self-declaration, and that address which is told in the letter, that can be verified using by posting a letter to that address within 2 months, or through a contact point verification, deliverables, etc. Further, regulated entities at their option may obtain a copy of officially valid document or deemed OVD or the equivalent e-document for the purpose of proof of address declared by the customer at the time of periodic updation. Accounts of customer who were minor at the time of opening the account on becoming major. So if there was a person who was minor at the time but has now become major, then a fresh photograph shall be obtained, and it is ensured that customer CGD document as per the current CGD standards are available. So customer due diligence. Wherever required, the banks may carry out fresh KYC of such customer, but a fresh photograph is taken on becoming major. Customer other than individual, in case there is no change in the KYC information of any legal entity, a self-declaration in this regard shall be obtained from the legal entity customer through its email ID registered with the bank, or through ATMs or any digital channel, or letter from an official authorized by the legal entity, or through a board resolution. So by any means a letter will be obtained. In case of change in KYC information, the bank shall undertake the KYC process equivalent to that applicable for onboarding a new legal entity customer. So if there is a change of information, change in KYC information, then entire process would be done as if while we need to do opening a new account. Non-compliance of KYC requirements, banks should impose partial freezing on such accounts which are non-KYC compliant in a phased manner. The option of partial freezing to be exercised after giving due notice of 3 months initially. So first of all, a 3-month notice is given to the customer, followed by a further reminder of 3 months. So this is total 6 months. Thereafter, bank may impose partial freezing by allowing all credits and disallowing all debits with the freedom to close the account. If the accounts are still KYC non-compliant after 6 months of imposing initial partial freezing, bank may disallow all debits and credits in the account and it will become inoperative. Further, it would always be open to the bank to close the account of such customers. Small account. A small account means a saving account in a banking company where the aggregate of all credit in a financial year does not exceed rupees 1 lakh. The aggregate withdrawals does not exceed rupees 10,000, and the balance at any point of time does not exceed rupees 50,000. Foreign remittance shall not be allowed to be credited into the small account. Small account shall remain operational initially for a period of 12 months and thereafter a further period of 12 months if the holder of such account provides evidence before the banking company of having applied for any of the officially valid document within 12 months of the opening of the said account, with the entire relaxation provisions to be reviewed in respect of the said account after 24 months. So total credits 1 lakh, debits 10,000, balance at any time should not exceed 50,000. It would be operational for a period of 12 months and a further period of 12 months. So total of 24 months, and that after 12 months also only when the person gives an evidence that the person has applied for any officially valid document. Accounts of self-help group. So due diligence of all the members of self-help group is not required while opening the saving bank account of SHG. Only the due diligence of the office bearer, the customer due diligence of all the office bearers shall suffice. So this is CDD, not COD. This is CDD. Customer due diligence of all the officials of the office bearers shall suffice. And customer due diligence of all the members of SHG may be undertaken at the time of credit linking of SHG. So this is SHG. So there are some typing mistake because so many things are there while giving the short form. Foreign students studying in India. So for them, non-resident ordinary bank account, that is NRO bank account, to be opened on the basis of their passport along with a photograph and letter offering admission from the educational institution. Foreign students should submit a valid address proof giving local address in the form of a rent agreement or a letter from the educational institution as a proof of living in a facility provided by the educational institution within 30 days of opening the account. Within 30 days of opening the account. During the 30 days period, maximum credit of foreign remittance up to $1,000 and maximum monthly withdrawal up to rupees 50,000 pending verification of address. So maximum credit of foreign remittance will be 1,000 maximum and withdrawal 50,000 rupees will be done. BSBDA, that is Basic Saving Bank Deposit Account. No minimum or maximum balance or restriction on credits in a year. Banks shall allow minimum 4 withdrawals in a month. There is a restriction only on the withdrawals, that is 4 withdrawals in a month including the ATM withdrawals. But there is no limit on amount of withdrawals. Other saving bank account in that bank need to be closed within 30 days of opening BSBDA. Customer can open BSBDA with only one bank. So if any account is there, it is also known as Pradhan Mantri Jan Dhan Yojana account. Jan Dhan account. So if that account is opened, then if a person is having another account in the bank, that needs to be closed and person can open an account with only one bank. Now let us see about the accounts opened using OTP-based e-KYC in non-face-to-face mode. So when in non-face-to-face, the following conditions should be satisfied. The aggregate balance of all the deposit accounts customer shall not exceed rupees 1 lakh. The aggregate of all credits in a financial year shall not exceed rupees 2 lakh. As regards borrower accounts, only term loans shall be sanctioned. The aggregate amount of term loan sanctioned shall not exceed rupees 60,000 in a year. Accounts, both deposit and borrower, opened using OTP-based e-KYC shall not be allowed for more than 1 year within which the identification is to be carried out. If the customer due diligence procedure as mentioned is not completed within a year in respect of the deposit account, the same shall be closed immediately. In case of borrower account, no further debit shall be allowed. Such account can be opened only with one bank. Monitoring of transactions and maintenance of records of transaction. Banks should introduce a system of maintaining proper record of the following transaction, that is all cash transaction of the value more than rupees 10 lakh or its equivalent in foreign currency. That is more than rupees 10 lakh. It is not 10 lakh, it is more than rupees 10 lakh or its equivalent in foreign currency. It should also maintain a record of all series of cash transactions integrally connected to each other which have been valued below rupees 10 lakh or its equivalent, where such series of transactions have taken place within a month. So if taken within a month, even though it is less than rupees 10 lakh, then also it should be maintained and record should be maintained. All transactions involving received by non-profit organization of value more than 10 lakh or its equivalent in foreign currency. All cash transactions where forged or counterfeit currency notes or banknotes have been used as genuine and where any forgery of valuable security of a document has taken place, facilitating the transaction, and all suspicious transactions whether or not made in cash. So this record should be maintained. So record of transaction at least 5 years from the date of transaction, both domestic or international. Records pertaining to the identification of the customer and their address. Copies of documents like passport, identity cards, driving licenses, PAN card obtained while opening the account and during the course of business relationship. So this should be at least 5 years after the relationship is ended. So at least 5 years after the relationship. Here also 5 years. In terms of PLA, banks are required to report information related to cash and suspicious transaction and all transactions involving receipts by non-profit organization value of more than rupees 10 lakh or its equivalent in foreign currency to the Director Financial Intelligence Unit India. So if the value is more than 10 lakh rupees in terms of PMLA rules. So this is in terms of the PMLA rules. So reporting to FIUIND, that is Financial Intelligence Unit, all the transactions of value more than rupees 10 lakhs or its equivalent in foreign currency need to be reported. Cash Transaction Report, CTR. The cash transaction report for each month should be submitted to FIUIND by 15th of the succeeding month. It should include transactions where cash receipt or payment is more than rupees 10 lakh and integrally connected cash transaction where cash debit or cash credit during the month exceeds rupees 10 lakh. All cash transactions where forged or counterfeit banknotes have been issued as genuine should be reported by the 15th of succeeding month. While filing CTR, details of individual transaction below rupees 50,000 need not to be furnished. STR, Suspicious Transaction Report. Banks should make STRs if they have reasonable ground to believe the transaction involves proceeds of crime generally, irrespective of the amount of transaction. So there is no threshold for the transaction, and this STR should be furnished within 7 days of arriving at the conclusion that any transaction, whether it is made in cash or not, or a series of transactions which are integrally connected, are of suspicious nature. So within 7 days, it is confirmed that it is of suspicious nature, then within that 7 days, this should be reported. Banks should not put any restrictions on operation in the account where STR has been made. Banks and their employees should keep the fact of furnishing of STR strictly confidential as required under PML. It should be ensured that there is no tipping off to the customer at any level. So tipping off means just telling to the customer that his transactions are found suspicious directly or indirectly. So we should not tell the customer as a banker regarding any transaction which are suspicious in nature, and we should not inform the customer. Cross-border wire transfers. All cross-border wire transfers of the value of more than rupees 5 lakh or its equivalent in foreign currency where either the origin or destination is found in India is to be reported to FIUIND. So cross-border wire transfer, it is 5 lakh, whereas for cash transaction report it is 10 lakh. So for CTR it is 15 of the next month, the submission date, and for STR it is 7 days of arriving at the conclusion that the transaction is suspicious. Non-profit organization. The report of all transactions involving receipt by non-profit organization of the value more than rupees 10 lakh or equivalent in foreign currency should be submitted every month to the director by 15th of the succeeding month in the prescribed format. So here also it is 10 lakh. c-KYC-R, that is Central KYC Records Registry. The c-KYC record received and stored by the c-KYC-R should be retrieved online by any reporting entity across the financial sector for the purpose of establishing an account-based relationship. Every reporting entity shall within 10 days. So within 10 days after the commencement of account-based relationship with a client, file the electronic copy of the client's KYC records with the Central KYC Record Registry. Earlier, this data was uploaded for all individual accounts opened on or after January 1, 2017. Now RBI has decided that banks shall upload the KYC data pertaining to accounts of legal entities. So previously it was individuals, now legal entities also, like companies and all, which are opened after 1st April 2001 on c-KYC-R. Regulated entities shall upload the KYC data pertaining to accounts of individuals opening prior to January 1, 2017 at the time of periodic updation. The Central KYC Record Registry shall issue a KYC identifier for each client to the reporting entity, which shall communicate the KYC identifier in writing to their client. Where a client submits a KYC identifier to a reporting entity, then such reporting entity shall retrieve the KYC records online from the c-KYC registry by using KYC identifier, and the customer shall not be required to submit the same record unless there is a change in the information of the customer as existing record in the records of c-KYC-R or the current address of the customer is required to be verified. So this is at present CERSAI is the Central KYC Records Registry. CERSAI, that also we will see in the further lessons. Video based customer identification procedure. So this is VCIP, that is video based customer identification procedure. So this is an alternate method of customer identification with facial recognition and customer due diligence by an authorized official of the regulated entity by undertaking secure, live, informed, consent-based audio-visual interaction with the customer. Such processes are treated on par with face-to-face customer identification procedure. Banks may undertake VCIP to carry out customer due diligence in case of new customer, onboarding for individual customers, proprietor in case of proprietorship firms, authorized signatories and beneficial owners in case of legal entity customer. Conversion of existing account opened in non-face-to-face mode using Aadhaar OTP-based e-KYC identification, updation, periodic updation of KYC for eligible customers. The authorized official of the bank performing the VCIP shall record audio, video as well as capture photograph of the customer present for identification and obtain the identification information using any of the following. That is OTP-based Aadhaar e-KYC authentication, offline verification of Aadhaar for identification, KYC records downloaded from KYC registry using the KYC identifier provided by the customer, or equivalent e-document or officially valid document, including documents issued through DigiLocker. Regulated entities, that is banks, NBFCs, RRBs, shall ensure to redact or black out the Aadhaar number. So the Aadhaar number, they should black out, it should not be seen. The video process of the VCIP should be undertaken within 3 days of downloading the identification information through c-KYC-R, Aadhaar authentication or equivalent e-document. All accounts opened through VCIP shall be made operational only after being subject to concurrent audit. So this is that this should be undertaken within 3 days, and these accounts should be made operational only when subjected to concurrent audit to ensure the integrity of process and its acceptability of the outcome. So thank you very much. That is all regarding the KYC.